Hi everyone, and good morning, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets, for Tuesday, the 25th of February. We've had a fairly the Asian market was actually fairly positive overnight, but the European trading has started on the back foot. I think more to the fact that the S&P 500 poked to a new all-time high intraday, but then rejected that breakout overnight, and that has sort of filtered through into the European trading this morning, with some losses on these stock markets. And the FTSE, for example, was almost at its key resistance, and that has shied away. The DAX as well has shied away, but what we've seen is this move, a little bit of concern perhaps creeping into these equity indices. Not really seen on the currency markets yet. The risk appetite remains fairly positive in that, with both the euro and sterling pushing higher against the dollar. The weak dollar is also helping the gold price to find support as well. So I think that there's a little bit of a dichotomy going on with the currency markets, which remain slightly positive, and the equity markets, which are in a corrective mode today. So that's interesting, that's going on in early trading. The German GDP came in line with expectations at 1.3% for the quarter. And to be honest, the investors will probably be now looking forward towards the consumer data and the housing data this afternoon from the States, which you've got the Case-Shiller House Price Index, that's at 2 o'clock GMT. Another piece of housing data, and also the consumer confidence at 3 o'clock GMT as well. So both of those are very difficult to call, actually, because you've got the fact that traders are tending to sort of look past the data at the moment, giving the weather in the US as an excuse to remain fairly positive. But what we've got in this consumer confidence number is 80.7 was the last month. It's forecast to come back to 80.2, and anything under that should theoretically be dollar negative. But it's a very difficult call at the moment, because, as I said, there are allowances being made for the bad weather figures in the States, but it just depends on how much that influences these consumer data and also the housing data as well, which house prices, the existing home sales last week, for example, were again a disappointment. So depending on how much weighting that is given to the weather in the States, will mean as to the reaction on these numbers this afternoon. But certainly at the moment, equity markets are lower, but the dollar is finding a little bit of weakness, with the euro and sterling higher. My charts of the day, as I said, back to these equity markets. The S&P broke out on an intraday basis yesterday and rejected that breakout. But the one equity market that is remaining very strong in this whole position is the CAC, the French CAC index, which has had a clean breakout above its highs. 4356 was the high, and it's had 2-day clean breakout, and is now looking up for further gains to the upside. This is a very strong move, I think, on this market, and certainly gives hope for further recovery in the CAC going forward. It's nowhere near its all-time high, which is back up in the 6,000s. For 6168 is the high on the all-time high on the CAC. But certainly there is room for upside, and I'd be looking for a correction, which is actually what we're getting today. We're seeing that correction in this CAC index today in early trading, and I'd be looking to use that as a move back towards this breakout support now at 4356. Excuse me, 4356 as a chance to buy this. I think this is a very strong move, and any sort of unwinding of that overbought momentum intraday should, I think, be used as a chance to buy this chart. So that's the CAC, a very strong index breakout. Well, I wish you good luck with your trading today. As I said, 2 o'clock and 3 o'clock this afternoon, you could be a bit of volatility with that housing and consumer data from the States. And I wish you good luck with your trading of all your investments today, and I will speak to you soon. Thank you.